James, we've seen a bit of weakness creeping through to the rand today, and that's despite the euro firming a little against the dollar yesterday and still holding steady above that 136 level against the dollar.
That's correct, yeah. There's a combination of factors leading to it. We've seen the equity markets internationally and locally taking a little bit of a breather. We've seen the bond markets also doing pretty much the same this week for reasons we can discuss later. But obviously the rand has pretty much been influenced by the carry trade, as we know, over the last few months, and perhaps with the other factors taken into consideration, people just short-term players taking their profits, taking positions out, looking for a little bit of a retrace in the rand to weaker levels. But I'm sure at which point we'll see a resumption in the high yield seeking carry trade.
James, when you say weaker levels, what are we talking about for the rand? Could we go back up to the 750 level against the dollar?
I would say, yeah, that should cap it at around 750. That's correct, Stephen.
And then you would expect to see these buyers coming back into the market at that stage?
Precisely that, yeah. That activity is set to continue, and going forward even further, the rand should benefit this year from a lot of positive sentiment that we've seen. Obviously the World Cup later in the year as well. So I think it will continue to be a year, at least the next few months, of stronger rand trading.
Well, just looking at today, very little data that we have seen, but we do have manufacturing production figures coming out shortly. What are you expecting from those, and are they potentially rand moving?
Well, manufacturing production figures out later. We're expecting to be at around the 5.5% level from 3.2, and I think that can be attributed mainly to companies building their inventories again this year, and also an increase in global industrial activity, as well as global companies increasing their activities all the same. So, yeah, I think it will be interesting to see, with the stronger rand, obviously, that companies have
of course, these are numbers coming out for January, and we've seen the PMI recently released for January and for February, and nice increases in that PMI. In fact, the last reading above 60. Of course, we know the break even is 50. So the manufacturing data really today should fit in with what we've seen on the PMI front.
I think pretty much, yeah. We have seen some good figures coming out of South Africa, which do indicate that we could be certainly turning the corner in our economy, although it will be slow.
Of course, we do have those weekly jobless claims, the initial jobless claims coming out of the US later in the session. Do you think that the market's going to be looking at those very closely as well?
Yes, certainly. We'll be looking quite closely at the jobless claims numbers that we're expecting this afternoon, though we are expecting them to be pretty much unchanged. But I think the main thing is, with unemployment levels around 9.7%, peaking at just around the 10% level a few months ago, we and the market will be looking to see whether that level has actually turned the corner and is coming lower again. So, yeah, we'll certainly be looking at that, and I expect subdued trade before those numbers are released.
We had some data from China this morning, and that really points to tightening monetary policy at some point soon. In that market, of course, inflation at a 16-month high, the CPI inflation. Do you think that this is maybe going to cause some jitters in the market if we do see interest rates starting to tighten in China?
It could do, yeah. As you say, the CPI numbers did come in at 2.7%. Although that is low, we must remember that it came off a level of 1.5% previously. Also, it's worth noticing that their industrial productivity was at 20%, as well as their trade balance has come down, but as a result of increased imports. So I think the market obviously looking at those numbers and expecting some tighter monetary policy going forward from the People's Bank of China. And obviously that was apparent in the equity market's performance earlier today. And yeah, that obviously, I think it's more a case of the economy there. Remember, Japan's growth is still sitting at around 9%. So it's more a case of the authorities there looking to cool the economy from overheating. So it is still quite positive news anyway.
Of course, we were chatting a little earlier, James, and you mentioned some interesting stats probably coming out of yesterday's trade figures from China. India and China now importing 50% of South Africa's coal. How has that shifted really from Europe being one of the main importers of it?
It is certainly worth bearing in mind going forward. I mean, previously we've always considered and known that Europe has been our major trading partner, but having seen those figures and seeing that India and China are responsible for over 50% of our coal exports, and remember, coal is one of our top exports. It certainly is indicative of where our future trading partners will be.
James, you mentioned bond issuance a little earlier, and of course we have had quite heavy bond issuance this week in the markets. Why has it been so heavy, and what's the impact on yields been of that?
Sure, there's been about 8 billion rands worth of bond issuances this week, and obviously we've got coupon flows coming next week into the market, so it is a good time for those issuances to absorb the extra liquidity going around in the market. So yeah, about 8 billion's worth of issuances this week.
And of course we know going forward that there is going to be more and more paper coming onto that market. I mean, would you see this depressing yields as we move forward?
It has done. It certainly, I mean, we've seen lows on the 157 around 13, the market trading higher today, back up to around the 25 level, and yeah, it certainly is indicative of the supply in the market and people just who were previously holding stock taking a back seat and possibly, you know, getting rid of some of their holdings. But yeah, at the moment.